Please continue staying with us as the conference continues. We are going into our next item on the program, which is going to be the first panel for today, and of course the Reader 2020. And we know that it's a panel that is focused on enhancing investment options in real estate, modalities, effectiveness, and impact. However, to kick off that particular panel, we are going to be having a presentation by one of our supporters and sponsors who have made this very possible, and that is the GMD and CEO of Pelton Morgan Holdings, in the person of Mr. Adeyinka Adeshokpe. Adeyinka Adeshokpe is going to be speaking for the next 10 to 15 minutes on this particular theme. Please, can we make welcome Mr. Adeyinka Adeshokpe?
I hope everybody can hear me.
Yes, we can hear you, sir. We can hear you.
Good. Listening to the presentation by Ashafa, Mr. Ashafa, I would say that there's no better time for our industry to move forward, but now. Having him at the helm of affairs, having Governor Babajide Sanwo-Olu also in Lagos State, I think this is just the time for our industry. Distinguished ladies and gentlemen, and I would like us, especially all of the stakeholders in this industry, to take advantage of their time. You don't get to have a moment like this. We need to take advantage of this. I would like to start my presentation this morning or this afternoon with just a bit of background of how I came to love real estate. It all started after a deep conversation with a friend of mine who would later become my wife during our university days. About 20 years ago or 19 years ago. The conversation centered around my dreams, aspirations, and ambitions, okay? Dreams about joining great minds to advance the economy of our great nation. Dreams about creating jobs. Dreams about advancing lives. Of course, my friend expressed her cynicism about the prospects of my dreams, inferring that the economy of Nigeria is structured in a way that is not favorable to the success of the youth. Whatever she says up until now, I take seriously, so I didn't take what she said lightly. I tried booking an appointment with my mentor, who also agreed to an extent with her, but assured me that with dedications, hard work, certification, training, mentorship, I could realize all of these dreams in real estate industry. And looking back today, I would like to say that my mentor was right. Truly, he was right. Through Pelton Morgan Holdings, the company I have the privilege to lead, we've created jobs. Indeed, we've joined in advancing the economy of Nigeria. We have not only done this, we've also helped in training others, both in private and public sector, who have gone to establish businesses, especially in real estate sector, and those who are taking active participation in the public sector. We've been part of corporate social responsibilities. We've built schools. We've undertaken community electrification projects. Of course, daily at Pelton Morgan Holdings, we are committed to advancing lives, to advancing the economy of our nation. Of course, we have achieved this through 3 of our subsidiaries, which play active role in real estate development: Grenadines Homes, McPartin Development, and Property Mart. Of course, we also have a construction company, Micheruti Contractor, and we have Pautin Lloyd. We call our group Pautin Morgan Holdings House of Brands. And what we've done basically is to segment the real estate market into about 3. So we have a company playing at the bottom of the pyramid, we have the one playing at the middle of the pyramid, and we have another one playing at the top of the pyramid. Of course, of recent, we've added a new one that plays in the commercial industry, the Oceana. So that's the brand that focuses on building towers. And we're proud to say that we have one of the most iconic projects in Nigeria right now. And today, I would be speaking about harnessing real estate investment options, effectiveness, modalities, and impact. Many would agree with me that I'd like to go through the presentation, but I just love the way Senator Ashafa went about his presentation. So I would like to speak from my heart. It is difficult to talk about real estate industry without just to talk about the economy of Nigeria. Like a simple scriptural quote says, if the foundation be destroyed, what can the righteous do? Real estate sector is a subset of the whole Nigerian economy. That means any impact on the economy of Nigeria has a direct effect on our sector. In 2016, we all can recall the economy of our nation went into recession. And it has been slow recovery ever since 2017, 2018, and 2019. Distinguished ladies and gentlemen, why it has been tough for the economy of Nigeria to recover, it has been tougher for real estate to recover. Of course, somebody would like to ask, why should it be tough for real estate to recover? Should we say it's not a place to put our investment? I would like to say that real estate industry remains that viable vehicle of realization and storage of value. Of course, the emergence of COVID-19 speaks to all of us. We now can see what is the most important things in our lives, or what are the most important things in our lives. Many people took to working online. Of course, many worshipped online. We changed our lifestyle. Many of us started shopping online. We did almost everything, or now we do almost everything online. But the truth of the matter is that I haven't seen, or I haven't heard of anyone who lives online. And this says something about our industry, that there is hope and that real estate continues to be that industry that is viable. Adding to that is the fact that real estate is driven by population growth in Nigeria. So definitely there will always be demand for real estate. Of course, we can leave the message or the talk about affordability for another day, but I would just like to say that real estate remains that viable industry where people should put their investments. We are committed we will continue to invest and invest and invest in real estate because we believe so much in this industry. But of course, in all of this loftiness of real estate, real estate has two challenges. A challenge of capital intensive. Real estate is capital intensive. And number two, challenge of liquidity in our industry. So real estate is not that kind of sector that anybody could want to jump in. We had Senator Ashafa talking the other time, talking about affordable housing and how difficult it has been to deliver affordable housing. Of course, the challenge also of illiquidity. So we cannot also sell our real estate assets as much as we can to our stock. And that is where all these investment tools and instruments of real estate come to play. REITs, crowdfunding, and investment bonds. Of course, but those who can afford it, they can always come out, put their money in real estate, either hold it to store value and sell it, enjoy capital appreciation, or sometimes rent it out, get their yield or income, and do what? Enjoy capital appreciation as well. Like I said earlier, not all can do this. With crowdfunding, crowdfunding allows people to put their investment, to put their money together to buy a property. And all of them can then benefit from the income that they realize. It can be from a developer raising crowdfunding through different platforms online to build their estate. Of course, I know they share the profit with all of those who have been part, who have invested into their project. Or people coming together, buy properties to do what? For rent, and then they get their income every year. The crowdfunding industry is projected to reach the size of about $95 billion by year 2025. The question I would like to ask is, where will be the place of Nigeria at that time? Where are we going to be when the size of the crowdfunding market is about $85 billion? Are we going to be part of the table, or is our economy going to be part of the menu? And I would say to all of the authorities, all of the agencies, and all of the stakeholders that it is important for us to take advantage, to position our economy so that we can also be part of the traction in this particular space. Today, I would like to do more on REIT. I love REIT so much, and this is why I love REIT. It solves the problem of illiquidity, and it solves the problem of real estate being capital intensive. It solves the problem of risk as well. So you can also mitigate your risk through REIT. REIT is when corporations, of course, when they raise money and they put this money into real estate and they get income from it and they share with their investors. It's as simple as that. We have publicly traded REITs, which I like very much, and we have private REITs. The good thing about the public REIT is that it allows you to just to buy real estate like your normal stock, like buying the stock of a bank or any company out there. And it allows you to also sell your stock when you need money, which solves the problem of illiquidity in real estate. If you if you had a property, let's say in Victoria Island of Lagos, and you needed money today, it might take a while to actually get it sold. But with REITs, you can actually sell your stock immediately. Just talk to your stockbroker and you get it sold. However, I have one or two concerns about the REITs in Nigeria. Why the size of the REITs in America is about 1.7 trillion, and South Africa maybe about 3.7 billion thereabout. Please permit my figure. Please pardon my figure. The size of the REIT in Nigeria is just below 50 billion naira, and we have 3 active REITs. In real estate in Nigeria, according to PwC reports, we have over $300 billion, and it can be as much as $900 billion locked in. REITs can help us to do what? To unlock this investment. REITs can create more traction in real estate industry. REIT has other benefits more than allowing retail investors into real estate. It has also tax advantages. So if you, on your REIT, the dividend from your REIT, you don't pay company income tax. You only pay in Nigeria. Of course, in other countries of the nation, in other countries around the globe, you don't even pay anything. But in Nigeria, we still pay, you pay about 5% withholding tax. So it's quite a viable vehicle that we can use to drive traction in real estate industry. When we talk about affordability, if we don't free all of the money locked in our real estate, it's going to be tough for people to get that money that they require to do businesses. So I would like to just round off my talk today on REITs, investment in real estate, and so on and so forth. I would like to round off with what I call the message of responsibility. And I summed it up in 3 R's. The first R, talking to all of the real estate players, all of the stakeholders in real estate industry, from the developers to real estate to investors in real estate, in the real estate sector.
This industry, we cannot leave it. We cannot leave it alone. We must push the regulations and the regulators. We must work with government agencies. We must stop working in silos, comfortable with the profits we make or comfortable with the progress of our company. It is not enough to expand the industry. We must work together. I always say it, this industry has been part of the menu for so long. You know, when an industry is part of the menu, it's the last to be considered on the table by the policymakers. It is time for us to be part of the table. And we have to do this through active engagement. We must be actively involved in REDAN, the Real Estate Developer Association we have to be active. All of the major stakeholders. If I look at it today, a few major, we don't get to have the major stakeholders as part of REDAN. We have to, so that we can expand this industry, not only for ourselves or our companies, but for the advancement of the economy of our nation. My second R is responsibility on the part of the regulators. And I look at this all the time. The regulators should provide oversight role, should develop enabling policies, should ensure that the market doesn't spin out of control, but that Regulators should not be creating barriers. Regulators should not be just gatekeepers. It should be about how do we advance how do we advance the economy of this nation. I do believe that there can be regulations, standardization, policy frameworks without necessarily building fences or keeping people out. This is a nation where we have the problems of unemployment and so on and so forth. What we need to encourage with policies is what? Is to encourage entrepreneurship. And that's the way forward. And my third R is the responsibility on the part of the government. The responsibility on the part of the government. This cannot be left to either developers or the regulators alone. The government has to be. When we talk about affordability, what comes to mind is the state of the economy of Nigeria. With our capital, it is difficult to make houses affordable. Some of the components or materials required to build houses, we must import some of them. Then you have to import in dollars. The other nations of the world are moving forward. If we are just there, it's just a matter of time. Our housing deficit will continue to increase, not only because of the population increase, but because of affordability. So there must be a deliberate effort to do what? To advance the economy. All of us must work together. Real estate is the second largest employer of labor. Where should the government be putting effort? It's real estate. It has a lot of value chains. And like I said, at a point, if the foundation be destroyed, what can the righteous do? If the government is not deliberate about pushing the economy of Nigeria forward and pushing our industry forward, let's look at it, what Bank Ease of Doing Business. The last time, of course, we appreciate all of the improvements, especially in Lagos State. We appreciate all of the improvements. Now from about 156, we're at about 131 in ranking. But this report says a country or nation that ranks poorly discourages entrepreneurial activities. Then if our policies, our frameworks discourage entrepreneurial activities, how do we create jobs? Like I summed it up in the 3R, we all are responsible and we must work together to just build our nation and make it a nation all of us are proud of, so that Nigerians both within and outside Nigeria can be proud of what is happening here. So on that note, I round off this session, and I say thank you to all of those who are listening. Thank you to Business Day for giving me the opportunity to open the conference, to be part of those opening the conference. And thank you to Reda. God bless you all. God bless Paul Morgan Holdings, and God bless Nigeria. Thank you, everybody. Thank you. And back to you, moderator.
All right, thank you so very much, sir. This is quite impressive. I mean, the presentation. One of the things I wasn't too sure about is you said that real estate is the second largest employer of labor. That should be after agriculture. I'm not too sure about that, but I mean, we get to learn every day. And then, of course, you're coming from a very informed background. That itself is important. But in the back end here at the office, we were also talking about the fact that you're right to say that an ancient lifelong document actually mentioned that without righteousness, if the foundation is eroded, what can the righteous do? As a matter of fact, if real estate doesn't have a strong foundation, the Nigerian economy cannot stand on its feet. So at this point in time, we are going to be deliberating and expanding on this conversation. And I want to say a big thank you, Mr. Deyinka Adeshope, the GMD CEO of Paulton Morgan Holdings, one of our sponsors. Your support has made this particular event very, very successful. Ladies and gentlemen, the moderator for this panel session is a man that I'm very much proud to be associated with. I was anchored in some other event where he himself was both a speaker and definitely have done so very well in this regard. And I know that he's going to handle this beat for the next 45 minutes, more or less. as the case is. However, the panelists for this panel session are as follows. Mr. Gbadebo Adejana, the MD CEO of Realty Point Limited. It's good to see you, Gbadebo. I know that we've had a lot of history and experience, even from the time when you started off, and I'm glad that your business is growing. And certainly, Mr. Adeyinka Adeshope, one of our sponsors, will be on this panel to also expand on this presentation. And certainly, Mr. Mohammed Azaria, MD CEO of Range Development, is also here. And we're glad to see your perspective, especially with so much of what you've been doing in your own client. And certainly, Mr. Tubosun Falowo, I hope I got that right, the COO Greenwich Trust, will certainly be joining us. Is definitely going to be coming from that area where we're going to be looking at a lot in terms of risks, foundations, and the rest of all of those conversations. And the most powerful of all the panelists, because she's sitting amongst 4 or 5 gentlemen, and that's the power of a woman. I've always said to you people that the women are the ones who make sure that everything balances out. And that is Mobola Akingbe. She's a partner of AO2 Law firm. She's definitely on the panel. So Tayo, I'm going to be handing over to you. You know how this goes for the next 45 minutes, plus or minus 5 minutes thereabout. And then we're going to go into the next session. Thank you very much, Tayo. Over to you.
All right, thank you so much, Stephen. Thank you to Thinkmint and Business Day for organizing this very lovely event. I think it's been very well organized, and the conversation is definitely very, very auspicious and timely for us to have. All the panelists, you're welcome. I'm sure the people watching have received the brochure, so they know who you are. They've received your full profiles, and so we can just jump right into the conversation. Thank you also, Mr. Adeshope, for that lovely presentation. We will definitely be touching on some of the things that you have highlighted in your presentation. I think I'll just kind of start off with Mr. Adejana. Obviously, knowing your depth of experience in real estate markets, in the services space, development, and investment space. The conversation for today is harnessing investment options in real estate. And I'd just like you to just take us through the value chain. What are the things that one should be considering when coming into real estate investments? What are the attendant risks? What are the ways to mitigate such risk? And what are the opportunities that lie therein when coming into real estate investments?
Yeah, thank you very much. Tayo, thank you for those questions. Very, very happy indeed. And also thank you, Thinkmint, for this very laudable event. It's been very stimulating from the presentation by Senator Ashafa, and then the recently concluded presentation by Mr. Adeshope. Thank you so much for putting all of this together. Business Day. To the question, when we talk about the various real estate investment opportunities and then the risk and mitigants, I think to really say that what should one consider when investing in real estate, my broad categories will be 3. 1, liquidity, which is very, very important. It's very key also because even going by what Mr. Adeshope mentioned, the very nature of highly liquid, okay? And when you are investing, you then need to consider liquidity. What helps liquidity and all, I mean, we'll talk about that. Security is another thing that you want to consider. A lot of people, the most they know about investment is to ask what is the yield, what is the ROI, return on investment and all. They seldom consider return of investment, because before you can even have return on investment, it should be that there is already a return of your investment. So that is very, very key. Security, how secured is your money? what's the certainty of income? Okay. Then profitability is a third one in that broad perspective. And when we talk about profitability, that's when the issue of return on investment comes in, yield, the growth rates, appreciation, capital appreciation in the case of real estate. So these are the broad categories or considerations that you want to look into when investing. And it is also from all of these that the risk and the mitigations would emanate. For example, major risk of liquidity. That is, how easily can you get your money back, for example, if you need it? Or how easily can money be returned back to investors, whether at the closure of the investment or things like that? Cost matters indeed. So when you are structuring your transaction or when you're going into a transaction, you want to know what is the cost implication. The higher the costs, of course, the you want to fractionalize, you want to unitize, and that's why unitization is a very good way of, solving that liquidity problem. Mr. Adeshokwe alluded to the beauty of REITs, in achieving, in helping to downplay on the challenge of illiquidity in the real estate space. The size of it also matters. So your share per unit, for example, because that will then enable more people to be able to come in, and that helps liquidity. So it also helps the marketability. How divisible, okay, is what it is that you are offering or that you are going into or structuring. How divisible, and we can see people trying to mitigate this risk by what is in the offering. Lately, so a lot of fractional investments are now becoming more and more popular. Albeit some have questions of regulation or structure being properly structured, but largely in response to the economy, in response to the market, there's a lot of fractional investment, crowdfunding, going on as a result of being able to attend or tackle the issue of liquidity. Also, there is the market risk. And when you come to market risk, basically you are talking about maybe like COVID happened, for example. That in itself wasn't a financial or an economic challenge at first, but then it has morphed into that. It's economic challenge one way or the other. Yes, in a unique nature, fine, but it is a challenge. So market risk occurs. One of the ways you want to mitigate that is diversification. Diversification within the market and outside of the market. Mr. Adeshokwe said something regarding their structure, as in at this company, which is very, very good, and is a way that a lot of people look at to mitigate market risk. So they have they play in the three tiers of the market: low, bottom of the pyramid, the middle, and then the high end. And then they're also trying to do commercial and residential. That's it. So diversification is important in addressing market risk. And that's one major one. And also you want to, when it comes to market risk, sometimes also one of the ways you can mitigate it is by maybe from inception, taking a long-term position, a long-term view, coming into investments with a long-term view. Because a lot of times, if you want to just game the market or predict the market, you may get your fingers burnt. But if you're in the market, even when when recession kicks in the real estate cycle, there's always, after a recession, there's always a recovery and there's always a boom after. It's a cycle. So if you're in the market for the long term, even if you are caught in recession and you can wait the timeout, you definitely get into recovery and then go on into into the boom period again. So there is the specific risk of, I mean, a particular player, maybe a particular industry, a particular product, how it's structured and things like that. These are risks that you want to look at. So when you are assessing investment, it's better to start, I mean, with this risk analysis and then looking at appraising your investment based on that template. Okay. Interest rate risk is also there. I mean, if you get into an investment, we had an experience in our organization during 2018, yes, into 19. If you recall, treasury bills going on, market rate was high. Treasury could do like as much as 18, 17, and so we're forced to be able to give investors some premium, okay, for the risk that they will be taking with us. So we're offering about 20-something%. But by the time a new year comes in 2019, if I'm not mistaken, the rates were going down. So we just had to truncate that transaction because there was no way we'll be able to continue to promise that huge interest and meet it in the new regime. You know, right now you can imagine if we had actually gone ahead and taken investors' funds to a serious extent, the kind of challenge you'll be faced with now, having to pay, I mean, when you can easily get lower rates at the moment. So you want to always look at all of that when looking at your investment. I hope I've been able to do justice to the question.
Yes, very well, very much so. Thank you so much.
Over to you.
Thank you so much, Mr. Adejana, for those insights and highlighting those financial metrics for consideration when investing in real estate. I'm going to move very quickly to Ms. Akin-Kugbe, and I'm just going to be asking her more of the legal and tax considerations, pretty much the same question, but I want you to highlight to us what are the legal and tax considerations that investors should be considering when investing in Nigerian real estate. And I want you to speak to it from the idiosyncrasies, that are prevalent in our current market and in our current reality as it is.
Okay, thank you very much, Taya. So I'll start with the legal because I kind of feel like there is not much to say in terms of legal because I feel like it really depends on the type of investor you are. So that will determine the dynamics of legal consideration to take. I mean, if you're investing under the REITs, I mean, there's some other considerations you need to take. And if you're investing as a private investor, those other legal considerations to take. So this is really a very broad question. But I mean, you want to look around like the last speaker said, pardon me, I can't remember his name. You want to look around risk assessments. And when you're talking about risk assessments, if you're investing as a private investor, you want to do your due diligence on a lot of issues. And if you are investing under the REITs vehicle, then I mean that's the highly regulated vehicle, so it's a safer vehicle to be investing under in the real estate. So these are really around stamp duties, and the primary ones are stamp duties and VAT. Going on to the income tax, we know that we get income primarily on real estate from rent. So I'll be looking at taxes on rental income. Some people argue that sale is an income under real estate. Personally, I don't agree because I feel like an outright sale would fall under transactions taxes. So income tax rent is the primary income under income taxing, and I think for that it's really the tax applicable under that one will be the withholding tax. Prior to some weeks ago, the tax appeal tribunal held that VAT no longer applies to rental income. So until, before then, VAT would normally apply, but now that doesn't apply. So yeah, they would want to look, I think, mostly around the commercials, which would be around taxes and reducing their risk and all the other taxes that, employment taxes could also come up at some point, depending on the vehicle that the investor is, depending on the vehicle of the investment. So yes, that's what I'll say. Thank you.
All right, brilliant. Thank you so much, Mr. Kigwe, for those insights. And it's quite interesting to note about the tribunal that held just recently, nullifying VAT chargeable on rent. It'll be good to know if that's applicable for both residential and commercial property. In our experience, commercial property has never been able to shy away from VAT, but it would be good to hear that it's been removed. Okay, as we continue the conversation, please, can we take note, and this is for our participants, you can send in your questions on slido.com. That's slido.com, and you can just use the code. You definitely need to use the code to be able to tag in your questions. Just use the code REDA, #REDA, #REDA, to just send in your questions. As we finish another round of questions or thereabout, I'll be able to take your questions that you may have for the panelists. I'm going to move straight on to Mr. Adeshokwe now, and still just going on this tangent of understanding how to come into investments in the Nigerian real estate market. I know that we have a lot of attendees that are curious, and that's why I'm appreciative of the thoughts that have been shared by both Mr. Adejan and Mr. Akikugbe on how to come into the considerations for real estate investment. But Mr. Adeshokwe, you're a seasoned investor, okay? And I would ask you, what would you consider the most viable investment options in the Nigerian real estate market, and how can potential investors be able to access them? And I want you to touch on viability from the perspective of not only in terms of profit, but in terms of accessibility. All right, being able to be accessed. So, Mr. Adeshokwe, I'll just throw that to you. I think you're muted, sir.
Hello? Can you hear me?
Yes, we can hear you now.
Good.
We can hear you now, sir.
I'm finding it difficult to hear you from here. If you can hear me.
Yes, we can hear you. I can hear you clearly. You're perfect. Your sound is perfect.
Hello, Mr. Moderator?
Yes, I can hear you. I can hear you.
Good. Can you please, at a point, I lost you. I couldn't hear. Can you please just come again, if you don't mind? I really apologize.
Oh, that's fine. But if you can you hear me now?
I can hear you perfectly.
Okay, brilliant. So I was just asking you that what would you consider the most viable investment options for a potential investor in the Nigerian real estate market? And I want you to talk to viability of options from a perspective of both profitability and accessibility. That is, as an investor, can I access these investment options? So realistically speaking, what are the most viable real estate investment options in Nigeria?
Thank you so much. Let me put it this, I'm going to put it in two ways, okay? So one for really sophisticated investors and one for average investor in real estate. So taking it this way, I mentioned earlier on that my preference, if you really want to mitigate risk, is rates, because it's well regulated and is publicly traded. I'm not talking about private rates. I'm talking about publicly traded rates. why do I just favor REIT? Okay, why do I favor REIT? I favor REIT for the fact that it solves the problem of illiquidity that we have in real estate. Okay, you can buy and then do what? And then sell at any time. There's this ease of conversion to capital. You can take your money out at any time you want. Your money is not locked in. So, and secondly, it allows for retail investors. So with whatever amount of money you have, you don't have to save up to, well, even a millionaire, you don't have to. You can buy, it allows for retail investors. And like I said, it is well regulated. So you know that, however, there are things to look at even when you are investing into REIT. You have to look at the underlying assets. I would say that assets concentrated with maybe real estate with residential is, to me, is more favorable. From the emergence of COVID-19, we can see how things are changing in the commercial space, hotel, offices, but residential, we cannot just walk away from it. Looking at the other side, and when you're investing in REIT, I think I also prefer publicly traded REITs to private REITs. Looking at it on the other side, which is I'm investing, I want to invest in real estate as just an average investor. I have my money, I would say, and I don't even mind either it is publicly traded or not. I'm not an institutional investor anyway. I would say, put your money in residential. You can buy land. Irrespective, I always love to say this, irrespective of the location, buy. It is said that the best business on earth is the earth itself. Buy land, keep it, fence it, or buy residential property. Why am I saying this? This residential aspect of real estate is going to be driven by the population growth, and you cannot get it wrong. The problem of affordability in Nigeria will be resolved at a time. I know, of course, we need to consistently call upon the government to go in the right track, but we can see a lot of effort from the President Muhammadu Buhari, one of the best and honest presidents of our time. So, and working with a whole lot of people, you can see efforts being made in the right direction. So the problem of affordability will be resolved, the ease of doing business will be resolved, and it's better to take a position now. So that's what how I would sum your question. So I think that speaks to it. So thank you.
Brilliant. Thank you so much, sir. But let me just ask you a quick follow-on question on that. So historically, all right, a lot of especially institutional investors have favored commercial real estate for obvious reasons because of higher yields and all. But what I hear you say is residential real estate, land. Why is it that you hold this opinion? Is it because of recent occurrences, or you've always held this opinion?
So like, if I take it from the presentation of Senator Ashafa, I really do appreciate his presentation. And like Mr. Kitunde said, it shows somebody who is knowledgeable and who is current. It's the new reality. There's something we can't, of course, when he spoke about nomads, I was scared because there was a time we were doing risk analysis, and we said during the session that what if people decided not to live in houses again? That's the extreme anyway, but he spoke about the new nomads. So houses, if we look at the reality, the new reality, the safe place I can say okay, is still residential. It's not that I've always heard that opinion. I know you get faster yield from commercial, but look at Nigeria currently. The occupancy in residential development to occupancy in commercial development. The market favors residential better than commercial. And like I said, to sophisticated investors, one good thing is if you invest in REIT, and if the rate is not a specialized rate, which is the kind of rate that is focused on a segment of the market, you enjoy diversification. So you can have a bit of your investment in commercial, a bit of your investment in residential, a bit of your investment in just put it all around. But there's one basic thing. We might be sophisticated, we might try to hedge our risk. I can tell you for sure, investment in land has never failed. Okay, we have different developments, and we have different developments, commercial, hotel, this, that, we have all of this. But for an average investor, not an institutional investor, for an average investor, that's where you should put your money. Put your money in residential. But most importantly, you can find a rate. Of course, that is better. At Powell Morgan, we are looking at setting up a rate to give people opportunities to partner with us in advancing the economy of Nigeria.
Brilliant. Thank you so much, sir. Thank you for those thoughts. Okay, I'm going to move to Mr. Fallower. Mr. Fallower is the CEO of Greenwich Trust. He's an investment banker, and I think I'm at liberty to share the big news, sir, of the license.
Well, I guess you can. I mean, it's a public information at this point.
Public information, so brilliant. So they've just gotten their banking license as a merchant bank. Congratulations on that. Mr. Fallow, I want you to add to this conversation.
And I think I have to start by the tone for the questions you just asked. I also like to say something about his enthusiasm. I think for him being a major stakeholder in that industry, I could see the energy, the passion, and then the way he has spoken so far about the opportunities inherent in that industry. But I'm a figures person, so I will just tell you the way it is, and based on what we have seen over the years. So in terms of performance of the real estate sector, I will look at it from two perspectives. First is, how has it even performed in the Nigerian capital market, which is somewhere you can actually just go, do an overview, and you can see things as it unfolds. So I will also give a perspective of how is that performed, even against the GDP of the country. So in terms of the Nigerian capital market, I recall during Mr. Adeshokwe's presentation, he made mention of the fact that we have just 3 listed REITs, which is true. In terms of the market capitalization of those 3 entities listed on the stock exchange, it's just less, maybe about $70 million US. I mean, so the deepening is not actually there. The illiquidity he mentioned as one of the issues that we have in the sector is very much, I mean, it can stare us in the face because you have just about 3 entities listed. Compare that to maybe South Africa. I mean, in the African context, South Africa have over, I think, 31 to 32 listed entities on Johannesburg Stock Exchange. And then the market capitalization itself, it's, billions of US. You're about 32 to 33 billion of US. So it gives you that perspective that the market is not that deep. There is no liquidity there. And also the stock exchange itself, when you look at the year-to-date performance in terms of the return on the market, it's in negative figures. So even if you have a bouquet of REIT entity that are listed, and then the market seems to be underperforming or not performing very well. So even your REITs in terms of the yield or returns you get on those REIT investments will not be that fantastic. Just oppose that to other options that you have, T-bills, equity investments, other instruments that you can invest to. I mean, the the difference is like day and night. So you see a lot of people coming in to do such investment because it's a short-term investment. Sometimes the liquidity is there. Risk is a bit managed. You can see a lot of transparency in terms of regulation and in terms of documentation. You could always see where you are going to in such level of investment. But comparing that to property investment is actually very tough. So a lot of challenges, you have a lot of challenges for you to come into property market. When you compare that to the opportunities that you also see, then you literally want to consider maybe making an investment in some other sectors or other areas. Now, the second thing I'd like to say is when you even compare this investment itself to compare it to, or you compare the whole market and the real sector market, you compare it to the growth in the GDP in the last couple of years, it's not been a very good, fantastic story. I hear when Mr. Bishop also mentioned the fact that aside manufacturing, aside agriculture, real estate is possibly or probably the second largest employer of labor, which is true. But the contribution to GDP in the last couple of years has not really matched up to that level of status. I mean, in 2017, it was about 6.92 contribution to GDP. In 2018, it's about 6.4. In 2019, 2019 is about 6.1. So you can see, I mean, it's not been that fantastic. So for us, it hasn't been a very good story, but I mean, like Senator Ashafa also mentioned in his presentation, you could only hope for the best. And a lot of the reforms are being put in place by federal governments, a lot of the reforms being put in place by various state governments. The stakeholders like you are having this kind of conference and this conversation around it, it will almost get better. Timing may be an issue, but just a matter of time, things will eventually get better. And particularly now, we are in a COVID issue, with an issue where we also have FX issues, a lot of materials required for even that sector in terms of building, construction and all that, a lot of times are imported. So you have double whammy of COVID and FX. And so how do you even wiggle your way out of this? So that's another challenge. And the federal government attention is essentially around health, agriculture, and I think manufacturing in order for us to get our way out of COVID. So a lot of these things will affect whatever investment decisions any new investor will want to look at in terms of coming into the property or real estate investment. And that's where I see it.
Brilliant. Thank you so much, Mr. Falowo, for those candid thoughts and for sharing them very eloquently. I'm going to come back to you because, interestingly, the last point you make about the federal government's perspective and focus, in recent times, they've actually announced a focus on housing. With a mindset of using housing as a generator of jobs and having a trickle effect into the economy, as well as solving the housing problem, the primary housing problem itself. So I'm going to come back to you and get some thoughts on how you think that will play out. But right now, I'm going to move straight to Mr. Azaria. Mr. Azaria is someone that has played in Nigerian real estate market for a bit. And I'll just start off by asking, what has been your experience? What has been your experience in the Nigerian real estate market, dealing with Nigerian real estate investors, getting them to buy some of your products, which are, out of Nigeria, and has it been harnessing this investment, for overseas real estate?
Thank you very much, Tayo. And first of all, pleasure to be invited to participate in this panel. Unlike all the other panelists, they're dealing with inward bound investment. So actually developing in Nigeria and attracting capital through various forms from that. Our structure is the opposite. We're inviting Nigerian investors to invest in our real estate investment structures, which are based in the Caribbean islands, where we develop high-end ultra-luxury resorts, whether that's in St. Kitts, Dominica, or Grenada. And given it's so far away from Nigeria, there needs to be an added incentive for that investor to look at these foreign markets. And that incentive is not just income and capital return expectations, but it also provides the added incentive of second citizenship. So a Nigerian investor, when they invest $250,000 in one of our hotels, can obtain second citizenship in the relevant country within a 3 to 4 month period without the need to visit that country through making a real estate investment. And the added benefits of that are significant. That's global mobility. You can travel the world without a need for a visa, whether that's the UK, Schengen, Russia, China, you name it. The added security that a second citizenship comes with, as well as potentially in our current development, the ability to migrate to the United States. So not only do you have very strong tangible benefits in that you're obtaining an investment in real estate, bricks and mortar, and as one of your panelists said, land is one of the best investments on this planet. We're also providing you the intangible benefit of the second citizenship, which also permits you the ability to travel the world. So you have more of the world where you can buy land and further your business. So it's really a double-pronged investment decision. One is you're looking at how that real estate will perform on its own. And secondly, what the intangible benefits are. And for the high net worth Nigerian investor today, anyone who is in a certain bucket, this sort of investment has become a necessity rather than a luxury. It's cost effective with all the anxiety being created by COVID, the heightening of borders, the restrictions, the deglobalization. This provides a high net worth Nigerian investor with the ability to manage his business and mitigate some of the anxieties which COVID has caused. So I'd say, over the past 6 months, we've been super busy and with Nigerian investors and spending a lot of time ensuring that, their investment is right from a financial perspective, as well as providing the intangible citizenship benefits.
So Mohammed, what would you say are the modalities for Nigerian investors to subscribe to your schemes?
Sure. So look, first of all, they need to decide which citizenship they want in which island. Obviously, they make a small down payment, and then my team work with them to compile the dossier of files, because whilst there's no need to visit or reside in the respective island, a due diligence process is undertaken by the respective country because they wish to make sure only good people with good backgrounds are admitted to citizenship, because the longevity of the scheme depends on the integrity of the applicant. So forms are completed and due diligence documents are provided. A due diligence process takes 3 months, and then an answer comes back, yay or nay. 97% we have a 97% success rate, and then the investment is completed and completion occurs on the investment. So it's a fairly efficient process. The countries in which we operate, the significant portion of their GDP comes from this, so they're experts in all of this. And providing someone is of clean background and good character, it really is a very straightforward 3 month process. They make an investment of $220,000 plus government fees, depending on how many family members are accompanying them. You can include your parents, your children, your siblings, your grandparents. The investment, the REIT investment, has to be held for 5 years. And then you can sell your share to another individual who also wishes to obtain second citizenship of the relevant country, and you retain your citizenship. So there's a very viable exit plan. So whilst the tangible benefit you must keep for 5 years, the intangible benefit is yours, not just for your lifetime, but your future generations. And the value of those intangible benefits, the citizenship, starts from day one and continues. And the value of that intangible benefit is really for you to determine. If you're a large businessman and you need to be all over the world, that is something we can't live without today. So it has a much higher benefit to you than someone else who may just be focused on a domestic market.
Brilliant. Thank you so much, Mr. Zaria. Let me come back to Mr. Adejana. And can you please kind of highlight to us, and this is coming back, of course, to the local Nigeria real estate market, what are some of the advantages and challenges of collective investment schemes like cooperatives, real estate funds, REITs in Nigeria? Obviously, like Mr. Fallow said, if you look at the 3 REITs in Nigeria, not only are they small, They're also illiquid. All right, they don't trade. All right, it's just stayed the same for years and years. They give out good dividend yields here and there, but they're very liquid. So what are the challenges of these collective schemes like cooperatives, funds, REITs, and the like?
Okay, thank you very much. Can you hear me?
Yes, we can.
Okay, great. So broadly speaking, yes, you know that the basic investment options available cuts across whether it's private or public. Mr. Adesope was okay, whether it's private or public, or whether it is equity or debt in nature. So saying that as it may, so we should recognize that real estate funds can be structured in all of these, any of these ways, okay? Now, talking about advantages, I think primarily it is common to have tax exemptions, okay, when it comes to most of these real estate investment opportunities. So sometimes totally, sometimes you still have to pay withholding tax and things like that. But you get your income tax only when you get your dividend in your own personal account. Those entities themselves are not really taxed in that way. At least for that of REITs, that was one major thing that Mr. Akim Oguniro and his team in his days at UPDC, ensured that we're able to secure when it comes to REITs in Nigeria. But that is the general nature across the globe. Okay, so then also, speaking particularly for cooperatives, they are democratically run. That is, they are open. I mean, members are the highest decision-making body, okay, for a typical cooperative. So that's an advantage. It means that they are participatory in terms of decision-making and all of that. So to that extent, that is an advantage. Another one could be that retail investors can actually come in. Structured transactions, structured investments in real estate allows for retail investors to come in. So it may not be so easy for anyone to just buy land. Say, for example, in Ikoyi, or let's take the REITs that are listed. A UPDC REIT, for example, made up of luxury properties, if I'm not mistaken. Now, someone with just about 20,000 naira investment when it was launched could have bought maybe about 2 units or so of that REIT, meaning that he will own a share of the luxury apartments in Ikoyi. But ordinarily, on his own, he really cannot own anything, any part of Ikoyi if he had to buy a luxury apartment and things like that. So it helps for, because of that low cost and entry, it helps to encourage retail investors and get people to. Then also, usually for the ones that are diversified, you can say that it's an advantage. It's an advantage to the extent that you can then invest in varieties at a go. Okay, at a go, you can invest in varieties, as against if you were investing directly in these assets, you would have to buy a below the pyramid, a low bottom of the pyramid property, middle of the pyramid property, and high end of the pyramid property to have a mix, okay, on your own. But if you are investing in a diversified instrument, diversified REIT, you will just buy that REIT, and you know that your return risk and all of that has been mitigated because they've been able to diversify. They have investments scattered across the pyramid. So these are advantages in themselves. Liquidity, they bring liquidity. We've talked about real estate being highly liquid. It is these structured transactions that helps to actually bring liquidity to real estate as much as possible. So these are some of the advantages. However, when we talk about challenges, I will just highlight two major ones here. One, and that is very critical, and probably the problem when it comes to this investment not performing as they've been maybe adjudged to, or as they've been appraised to, or as they've been sold, to us, have been issue is governance. Okay, governance is a major challenge. Yes, there are regulatory authorities and all, but that is one major challenge that they are also having to contend with. Being able to keep up with operators in ensuring that best practices, followed, is a major challenge across the globe, not just in Nigeria, or across the world. Governance, how to ensure, maintain and sustain good corporate governance when it adhering to the regulations and what the regulators really require is a major challenge. The other one, for example, when you talk about the cooperatives, for example, the major deficiency of the cooperative is that you can be saddled with, or you can end up with management that is not capable, because it is structured such that members are the highest making body, and then it is from members that the management committees are elected. Somebody can just have the ability to be able to convince people to and win an election, but not have the capacity or capability to actually move that cooperative in the right direction. And so that is a major challenge with a lot of cooperatives when they are saddled with management that really are not experienced, in the type of market that they want to be playing in. And lastly, maybe just to add this as corruption, you may want to say, is another major issue. But I think that has been alluded to by way of, when we talk about governance. Thank you very much.
Brilliant. Thank you so much, Mr. Adejana. You raised very, very salient issues and challenges with these schemes, and how they also create some advantages. And it's just that balance that really, really does matter in making sure that they become the veritable tool for investing, basically. All right, our time is fast spent, so I'm just going to ask just about one or two more questions. I'll throw one of the questions that have come in from Slido. Basically, I'm going to add two of them together, and we'll just take that, and anyone can take it on the panel. With the inflation rate, the question says, with the inflation rate and minimum income fixed at 30,000 Naira, how do you think income earners of such can be house owners? With minimum wage, how do you think people on minimum wage can be house earners? Is there anyone on the panel that wants to take this question? Okay, if no one on the panel will take it, I could just...
Hello.
Okay, yes, Mr. Adeshoko, please.
Hello. I think for any kind of budget, there's always maybe a house somewhere for it. So it depends on the location. It depends on location anyway. And like my brother said the other time, you could invest, you could be part of a cooperative. Because in cooperative, there is a way. I haven't done so much, but I know that Debo Adejana has done a lot, and I can't boldly recommend him to be candid, even though we play industry. There is a way you can join a cooperative. They're structured in a way to help you with any amount of money that you have to be able to deliver, to be able to access your house, your dream home. But the challenge is, which location are we talking about? Where do you want your house? I was part of a conference ago, international conference, and I heard something about affordable housing. So I said, this session,
I must be part. So I went there. And by the time they started talking about affordable housing, they were talking about 1,500,000 something, 200,000, going to dollars. To be candid, it was in Dubai. So they were talking about 1.2 million naira dirham, 800,000 dirham. And I asked them, in naira, what is that? We converted, we're talking about 50 million naira. So I challenged, how do you call that affordable housing? And they told me affordable housing depends. So affordable housing, what affordable housing is alone is different from affordable housing in Dubai, and affordable housing in Dubai is different from affordable housing in Nigeria. So the truth of the matter is, what is your expectation? What kind of a house do you want? I do believe that with your budget, you can always have something. Start from buying land and gradually putting it up together, especially if you leverage the support of cooperative. But I would like to say, the person who asked the question shouldn't be too ambitious about location and how the house will look on the lighter one. Thank you.
Absolutely. Yeah, so affordability obviously is determined by the person's pocket, and you also should be cognizant of location and budget. I'll just ask a final question that's coming. What impact do you envision the weakening of the Naira is going to have on the industry? Is there an increased risk that some developers may abandon their projects?
Yeah, is the question directed to me?
It looks like it's between you or Mr. Adejana, so you can go for it.
Yeah. So let me put it this way, and I may have maybe more to say on this. And let's look at it. Mr. The speaker from Greenwich said something about real estate not performing as much as other industries are performing. The stock of real estate is not performing. And let's go back to, I'm going to answer this question, but the question you put to me, but I would like to touch this before answering it as you are rounding up. In my presentation, I made mention of the fact that real estate has been part of the menu for so long, and that it is time for developers to come together, engage government, and be on the table. So over the years, it's been neglected. The fiscal and monetary policies of government last year yield on treasury bill at about 16%, 17%. Some people, how would that favor real estate industry? How would that favor real estate industry? So when all of these decisions are being taken, how well do we consider the interest of the industry? And that is why all of the stakeholders must engage a regulator, engage government, and make them to see the importance of this industry to the advancement of the economy of Nigeria. Of course, I would also like to respond to the fact that rate, non-performance of the rates. And I do believe that Mr. Debo Adejana did a good job on that. Where do you, if you're buying a rate, who are the people? What's the composition of the management? Who is powering the rate you're buying? Are they conservative? Are they relaxed? Or do they have energy to drive return for you? Those are the things to consider. I don't want to mention the names of banks, but we've seen some small banks some years ago taking up the big banks and then be number one, number two, or number three because of the energy of the drivers. And that's why it's not enough to look at that. And that is why SEC and Nigerian Stock Exchange must look at how to allow the youth of Nigeria, those who have energy, to participate, break the barriers. Let's look at crowdfunding, putting a barrier of about 100 million naira before a company or a firm could play in that space. I see it as a barrier. How many youth of Nigeria, those who have the energy to drive the economy of Nigeria, how many of them can raise that? When we started, it was difficult to raise the money to register a company. We needed to borrow a name of another company. It was difficult to rent an office. We needed to squat in an office. That's the challenge. That an average Nigerian who is willing to advance the economy of this nation, those are the challenges they face. If you raise barriers, at what stage will they be able to raise that money? Let's break the barrier. And now coming to your question on the impact of this inflation, of course, is going to have impact on the real estate sector, on the part of developers and on the part of investors, those who are the end users. They're both going to face it. Why on the part of, and also it's going to affect the government further. It's going to increase housing deficits, because issue of affordability comes in. If people cannot afford, they will not be able to buy. Okay, they need more money to be able to buy. That is on the part of the end users. And now let's talk on the part of developers. To be candid, we as a company, we faced that in the past, and we face it every day. So you sold properties. Many of us know that in Nigeria, the only way developers have been able to structure their business is to do off plan. So you sell off plan. So the price is fixed. And then there is inflation. So dollar goes up. You get your fingers burnt. Some developers actually who are doing their business honestly with good reputation and credibility, for all of this inflation and devaluation of Naira, they've almost lost their credibility. But how have we as a company been able to mitigate this? So whenever we are selling our properties, we try not to sell all, because we know this is Nigeria. Permit me to put it that way. There will be inflation, there might be devaluation, so you sell a bit of your property. As devaluation comes in, then you rejig your price. Then, so that at the end of the day, by the time you are exiting, you are able to even out. You're able to balance, to strike a balance between what you sold off plan and how you exit your development. But definitely, it's going to impact real estate industry, the end users, and it's going to impact both the supply and the demand side of real estate. So thank you.
All right, thank you so much, Mr. Adeshokwe, and all the panelists. Fortunately, our time is fast spent. That's what happens when you have very brilliant minds on the panel and you're having fun, talking about what you love. But I believe this conversation has been able to help our attendees to understand some of the contemporary issues facing investing in real estate. And obviously, you can always contact each and every one of us subsequently to take this conversation further. Thank you so much. I'm going to hand over now to the MC to take us further.
Tayo, that was an excellent panel. I can imagine that if we had this as an on-site event, very sure we would have had a much more expected one. But for you, each time I see you at real estate events, I'm always very confident that you will definitely carry it, not just to standard, but you always create a whole new benchmark for us to be able to relate with. And I want to say a big thank you so very much. Gentlemen, we want to say thank you. Please stay tuned. Oh, pardon me. Please keep on in the conference. I thought I was on television. Pardon me. And then the conference continues with the second panelist and the next panel. But before then, I would like to quickly announce that Reader 2020 is organized by Thinkmint Nigeria. Gladly, Business Day happens to be the media partner, as the case is, and we have sponsors who have made this very possible. Certainly, Alpha Mead, Powton Morgan, thank you very much. Urban Shelter Properties, Cedar View, Homework, exactly, have made all of this quite successful. The only difference is that we're just talking to each other through our lenses. However, I can imagine that this is still quite a wonderful experience, because I can see Mukhtar. I know Mukhtar is very eager to share with us some of the insight that they've had. I mean, some of the experiences they've had earlier on. But before we go into the next panel, we would like to quickly announce that we have another award presentation and that award presentation is actually tagged the Real Estate Woman of the Year. And this award category is to celebrate the woman who has impacted the real estate industry through her performance, industry engagement, and achievements. Many women have been instrumental to the ongoing revolution in Nigeria's real estate industry. But the winner of this award stands out. And I'm very much excited, and I wanted to be on record that I'm one of the men who are women advocates, because we know that the women themselves are doing well. Tayo is laughing, but it's the truth. The women bring in the aspects of colors to the industry, and we're living in a sustainable development age where diversity and inclusive growth is what we must be pursuing. And that itself is very important. And this award is going to recognize that. And the nominees are Sadia Aliyu, the MD CEO, Urban Shelter Nigeria. Our second nominee is Uzo Oshogwe, I hope I got that right, MD CEO, Afriland Properties. And then we have our next nominee, Modupe Anjos of MD CEO, Rider Mills, and Bola Shagaya, MD CEO, Bolmos Group. And the winner is going to be announced by no other person than Mr. Adeyinka Adeshokpe, the MD CEO, Palter Morgan Holdings. Mr. Yinka, who is the real estate woman of the year 2020? Sorry, we can't hear you. I can't hear you. I can't hear you. And this is a moment that is Eureka. I can't hear you. I can't hear you still.
Can you hear me now?
Yes, I hear you now.
Good, good, good. I'm so delighted to be the one to present this award, especially, you know, if you go by the name, the Real Estate Woman of the Year. If we have both men and women playing actively in the real estate industry, we can have the diversity as you mentioned, and we can be able to, we can push or advance the industry together. And the winner is, of course, I've been seeing the brand, and I can say for sure that she's been doing a very great job, and I've been impressed by all that she has contributed. Uzo Ochogwe of Afriland.
Woo! Congratulations. Yeah, we can put our hands together. I know some of you might not want to put your hands together. I think that they are watching. All right. Anyway, Uzo, here you are. It is written in black. Congratulations at this Reader 2020 edition, where you have been nominated and, of course, won the Real Estate Woman of the Year. And as a matter of fact, every other nominee is a winner, but I guess the industry feels that there is something you must have done that is the extra, icing, extra toppings on the cake to have given you that award. Congratulations, man. The award is going to be presented physically to you because all of this virtual experience has its own way, and we're going to have the photo ops as well coming in. So thank you very much, Mr. Adeshokwe, for helping me out with that.